Trolls live stream. You're watching Closing Bell with me, Lovisha, Darad, and joining me, my colleague Yatin, Mota. Well, quite a volatile session today once again, but I wouldn't term it as a completely bad market because we did make good attempts to recover. Sensex, however, did end flat in the red, but recovered about 400 points from its day's lows. And Nifty also defended the 22,800 mark that we were talking about today also and even yesterday. Financial stocks that provided strength to the markets. Bank Nifty index, which was up about 1% at this point of time. Realty and energy stocks also provided similar strength and held up well in this volatile market. However, Trump's tariff comments on imports of pharma about to the tune of 25% that he is planning to impose starting from April, that sent quite a dampener in some of the certain stocks like Nifty Pharma index definitely declined by about 0.7%. Nifty auto index flat in the red at this point of time, and so these two sectors that were completely hampered by it. On the other hand, Nifty IT index, which yesterday showed some signs of strength, did turn out to be one of the top sectoral laggard and lost about 1% in today's trading session. This came after Capgemini shared a cautious outlook for 2025. So we will be discussing more on this later in the segment too. But yes, the main headline definitely was the Nifty Smallcap index, up about 2% in today's trade, and which broke the 9-day dull period too. Mid-cap index also showed similar resilience, and mid-cap index ended with about 1% gains too. Yatin, now what are you gathering from the overall market texture and definitely from the mid-cap and small-cap space?
So, Lovisha, if you look at the markets, clearly today was a good day. The IT stocks, which have a huge weightage on the Nifty, we saw, the screen which was broadly green. Mid-caps were rebounding. Especially the stocks in the FNO segment were also, witnessing some bounce back. Now, if you look at the overall market advance decline ratio, which was almost, one advance for 4 declines yesterday, moved better. In fact, today we were almost near that 4:1 advance decline ratio, meaning 4 stocks gaining on 1 declining side. If you look at the Nifty Bank, almost a percentage points higher for that stock or the index. In the FNO segment also, good stocks were moving, stocks like BSE, Manappuram, RBL Bank, Angel One, clearly giving a comeback. With BSE moving 8%, it clearly shows that the people are hopeful of a, market bounce back from the current level. So overall things look healthy for the markets. At least for the time being, we are able to defend that 22,800 level from which we have consistently bounced back. In fact, today we crossed the 23,000 mark on the Nifty, which is a positive sign for the bulls.
That's right. But turning to some of the top gainers on the Nifty and the losers, well, Bharat Electronics riding the defense boom up about 3% in today's trade. We will be discussing more on how the defense stocks did become one of the major attractive points in today's trade. Apart from that, we saw that Hindalco was also up about 2% after JP Morgan did share an overweight rating on the counter. L&T with about 1.5% gain after acquiring some balance 26% stake in the L&T Special Steels. And Eicher Motors did see a good recovery, nearly 2% gains coming in for Eicher Motors, because after we saw 12% fall post its weak Q3 numbers. So some recovery on that front. On the other hand, we can see some private lenders doing well. Axis Bank, ICICI Bank, given the Bank Nifty index was also up, 1.5% gains coming in for both the private lenders too. On the other hand, if we look at the top Nifty 50 losers, as we were talking about the pharma indices, some of the pharma stocks also dominated the list, which is your Dr. Reddy's Lab seeing about 2.5% cut coming in. Apart from that, IT stocks, we can see TCS and Infosys seeing about 2% cuts each. HUL also suffered some decline, 2% cut, and Adani Enterprises also featured in the top Nifty 50 losers list. But from mid caps and small caps, Yatin, what are you seeing?
So overall, as I mentioned earlier, there was, good amount of strength. If you look at metal stocks, good moves on Nalco after EU has further sanctioned, Russian aluminium imports. Stocks like Hindalco, Nalco were doing better. On the Nifty 500, we had JBM Auto, which has bagged a 5,500 crore order for buses under the PM, e-bus Yojana, and that stock saw a 15% move coming in after that exchange announcement. RVNL, be it railway stocks like Ircon, other wagon stocks, they were showing a comeback. In fact, select PSU defense stocks were also gaining in trade. So the PSU pack, which was badly beaten down in this bear market, is witnessing some bounce back. Stocks which are not doing well even in a good market like today was Credit Access Grameen. That stock was down 7%. PTC Industries, which is a defense play, down 5%. Concord Bio, Sham Metals continue to lose sheen and were down anywhere between 4 to 5% intraday.
All right, let's break down some of the stocks that did grab the limelight today. First up is your pharma stocks that cracked in today's trade after US President Donald Trump signaled to impose about 25% tariffs on the pharma imports, which is expected to start from April 2, but more will be watched out on what he says. Apart from pharma, he also plans to slap tariffs on auto as well as semiconductors. Aurobindo Pharma, that was the stock which was hit hardest, primarily because of the double blow of the US FDA observations to its Andhra Pradesh facility too. But apart from that, other counters like Dr. Reddy's, Zydus, Laurus Lab, Glenmark Pharma, all of them declined in the range of 2 to 3%. Now, the major factor why the pharma stocks took a plunge today, now since India supplies about 40% generics to the US markets, now this proposed tariffs could impact their margins, which would make Indian exports which less competitive in the US markets. What differentiated these Indian generics from other medicines in the US markets was that it was less expensive, and now if these tariffs are implemented, it could change the pricing dynamics. Either it would impact the competitiveness of the companies if companies passed on the increased cost to consumers and impact their demand or suffer from the margins perspective due to price erosion. And secondly, at present, India charges about 10% tariff on pharma imports from the US, while US does not charge any tariff on pharma imports from India. So if this takes shape, it is higher than what we are charging at this point of time. Yet in past couple of months, experts have been gung-ho about the sector too, and the earnings wasn't also particularly weak. Now that this tariff plans have taken shape and Trump has initiated them, would you say a time to nibble to this correction too, or stay away at this point of time until more developments are watched out?
So Lovisha, if you look at the entire pharma pack, India exports generic drugs to the US markets. These are much cheaper to the, originating drugs which are usually, supplied by the European, pharma giants. Now, if you talk about tariffs, Trump has been talking more on European, pharma imports, which have been quite expensive in the US markets. I'm not sure if, putting a tariff on Indian pharma export makes sense for the US, because India any which ways is a low cost generic exporter to the US markets, which probably keeps pricing under check and, ensures that the healthcare, cost in US remain under check. Probably, it is too early to say as to what kind of tariffs Trump wants to implement starting 1st of April. Will it be a 25% tariff for European drugs or for Indian exports is something which is not yet clear. But today, clearly, we have seen a big gap down on Indian pharma companies. The likes of Aurobindo, Dr. Reddy's, Lupin were down 5-6% intraday. They had recovered intraday, but as you mentioned, probably could be a buy opportunity in all of these pharma names.
All right. Let's move on to another pack which was buzzing in trade today. That was your defense counters. We saw the likes of DCX Systems, Zen Technologies, Data Patterns, Garden Reach, Mazagon Dog, BDL. All of them surged in the range of 5 to 12%. Now this came after Defense Secretary's comments about relaxing the FDI policy to propel growth in the sector. Now, what the Defense Secretary has announced that the current defense budget of 6.21 lakh crore is projected to rise by about 9.5% to 6.8 lakh crore in 2025-26. He also stressed the need to spend around $30 billion annually over the next decade for defense modernization, which typically means upgradation of defense equipment or even the infrastructure. Now, most of these stocks, the defense counters, they have already corrected by up to 60% from their record highs. There were certain concerns of slowing of order inflows and, of course, expensive valuations. But however, the Q3 earnings, that has turned out to be mixed for the sector. HAL has posted about a strong Q3 show. Brokerages also gave a thumbs up. Bharat Dynamics also posted a good bottom line, but margin squeezed. And Data Patterns also showcased a weak quarter. Yatin, in the capex theme, railways may be going out of favor, but defense has always stood tall. And now with these FDI norms getting relaxed, what the Defense Secretary has indicated, it could further boost the sector from here on.
Absolutely, and we have the recent Trump and Modi meet, which also meant reciprocal imports for Indian goods. So the kind of defense imports we do from America, America would have to, give a reciprocal order for defense businesses in India. Obviously, we are doing a lot of indigenization. There is a lot of technology transfer that Indian companies have now started doing and producing in here. Also, export markets have, been doing well for all of these defense companies. So, in general, the hope is that defense companies would do well. But yes, most of them have corrected more than 30-40% and are bouncing back in trade. Probably earnings from now on would be important to watch out for, because most of these companies were high PE, ran up too fast, and now probably the markets are adjusting them with respect to the overall earnings picture, which will be thrown up in the coming quarters. But moving from defense to IT stocks, and today IT index fell nearly 1 percentage points plus in the markets. In fact, it was the biggest lagging sector in trade today. Stocks like Infosys, LTI Mindtree, TCS fell anywhere between 2 to 4% on the back of results from Cape Gemini, which had been on the muted side. In fact, if you look at North America as well as Europe, especially France, the constant currency decline on a year-on-year basis was more than 3.5%, especially France, which is the home turf for Cape Gemini. In fact, if you look at Cape Gemini, they had given the guidance for FY25 constant currency growth to be -2% to 2%. That is a range, which means that there is always a risk of degrowth in the uncertain environment. In fact, Cape Gemini said that there has been pressure with respect to demand in Europe, especially from the manufacturing sector. And also, if you talk about North American markets, clients are still unsure. Obviously, the overall order book hasn't grown so much on a quarterly run rate basis, and probably which has led to correction in not only Indian IT companies, but back home Cape Gemini post earnings also fell 2 to 3%. So, Cape Gemini IT numbers are not auguring well for Indian IT companies.
That's right. While we were expecting certain recovery to take place from next fiscal year, this definitely has acted like a dampener at this point of time. Now, since we have been talking about the capex theme, we talked about defense and of course the other themes too. We have RVNL shares which took flight today. The stock surged as much as 13% in trade today after it secured about 554 crore rupees order for the Bangalore suburban rail project in Karnataka. Now, the order has been placed for the construction of Bengaluru suburban rail project in Karnataka, and is expected to complete the project in a joint venture with Ritwik Projects. That this will be having about 49% stake in it, and the order is also set to be executed within 24 months. If you note, RVNL shares have also snapped its 3-day losing streak, and it was up in today's trading session, and the railway stock has already seen a significant downturn in the last 6 months, falling about 35%. Yatin, today morning also when I was talking to technical expert about the stock, he did mention that the stock's chart continued to remain in the negative territory and the setup looks quite negative despite the today's optimism. So it could mean that today's rise was just a temporary reaction, and the overall market sentiment over the railway counters has been relatively quite bogged down.
I think Lovisha, post the union budget, wherein the defense outlay and railway outlay were kept lower than the market expectations, we saw a big correction in all of these stocks, especially to do with railway stocks, wherein there was expectation that the railway budget will be increased substantially. Nothing of that sort happened, which turned negative sentiment against all of these stocks. And ever since the budget, most of these railway stocks have been on a correction spree. If you talk about order books, yes, they have healthy order books running, but probably the kind of valuations these stocks commanded, in the bull market, or probably in late 2024, was to do with the fact that the government will keep increasing the railway budget, railway spending, and suddenly, with a flattish kind of a railway budget, there was disappointment, and this is probably like a bounce back for the time being. And as I mentioned earlier, for most of the PSU stocks, defense stocks, railway stocks, earnings growth is something that the markets will be looking at, given the fact that all of these stocks had run up much in advance.
That's right. All right. But with that, we've come to the end of this edition of the Closing Bell. Tonight, we have the FOMC minutes which will be trickling in. So we'll be watching out how the Fed is likely to move its rate cut and how much more cuts will be done this year. But until then, signing off, Yatin and me, thank you for watching.